Hello and welcome to another episode of Showcasing North Leeds, where I'm on a mission to find all the businesses in North Leeds and beyond. And today I'm delighted to be joined by James Homer from Forest Hall Financial Solutions.
Hold on, correct.
Tongue twister, I got it right though, it's all right. So thanks for joining me first of all.
My pleasure, thanks for inviting me.
I was like to ask or start off, what is it you do at Forest Hall?
Yeah, so we're a mortgage brokerage, so it's residential mortgages, commercial, development, so anything in the sort of the lending sphere, we are brokers for it. So either individuals or limited companies or whatever it might be come and approach us when they need borrowing to buy houses, development sites, commercial buildings, whatever it might be, and we are the intermediary essentially between them and the lenders, so we connect them to the correct lenders.
Sweet. And from my point of view, it's always interesting for me because I always say to people, you need to speak to a broker.
Yep.
Rather than going directly to their bank, speak to a broker. Just very quickly, what are the advantages of speaking to a broker rather than going directly to your bank? Yeah,
so we're what's called a whole of market broker. So we have access to all of the lenders, and there's north of about 100 or so at the moment. So it's almost impossible to expect a borrower to be able to go to anywhere near that kind of amount of lenders individually. That's our job. So they'll come to us and we're essentially the one-stop shop. They give us all their information. So we take all their incomes, expenditures, their personal situations, and then it's our job to go out to the whole of the market and match them to whichever the best lender is for their particular set of circumstances. So it's a time saver. It's normally a cost saver as well, because if you, for example, would think, well, I've banked with HSBC for 10 years, I'll just go to HSBC. They might not necessarily be the cheapest possible lender at that point. My job is to connect my clients to the cheapest possible lender that's going to also suit their particular set of circumstances.
Okay. And you mentioning cheap lenders and everything now. Great time to talk about what's happening with regards to lending and interest rates. And today is the 21st of May, so obviously it's not going to be released today, but just keen to understand what your interpretation is of what's going on in the market currently with interest rates.
Yeah, I mean, it's an optimistic time, I think. I think most of this year has been, rates started coming down in the first part of this year. You'll remember January, there was a bit of a gold rush and we all thought, well, that's brilliant. Base rate's going to come down as well. And then inflation didn't come down as quickly as it was hopefully going to. And that's very closely connected to what the Bank of England decides the Bank of England base rate's going to be. So inflation's been relatively stubborn, which means they haven't been making any base rate reductions. But lenders still kept ticking their fixed rate mortgages down just a little bit, and that encouraged a bit of market sentiment. And then in the last month or so sort of April, parts of May of this year, lenders have been ticking their fixed rate mortgages back up again, which has sort of given the Bank of England a bit of pause on dropping that base rate. So we're currently at 5.25%. Hopefully by the time this goes out, it'll be a little less than that. The next base rate announcement is in June, and then there's another one in August. So we're hopeful that there'll be a reduction in June. That's not my prediction because that might not age very well. It might end up being August, but it does look as if the direction of travel is for a reduction in the base rate, hopefully at some point in the summertime this year. Yeah,
I was saying that obviously we follow it closely as well at the same time, and we saw that in March, it was March, in March, there it was 8-1 to keep it the same, 1 to decrease, and then in May, it was 7-2. So they're getting there. So
they're getting
6-3, and then
fingers crossed.
There, but
luckily, the crucial takeaway from that is no one's voting to increase yet. So out of those 9 committee members, everybody thinks it should either be staying or reducing. Obviously, tomorrow, which is the 22nd, is an inflation announcement tomorrow. If the inflation announcement is as low as everybody hopes it's going to be, that'll have a big impact on whether or not the Bank of England decides to put the base rate down again in June, which would be great.
So hopefully it's the 20th of June, if I remember correctly.
Correct, that's it.
That are doing it. So okay. And then one of the interesting things I saw was that mortgage approvals is at its height it's ever been since September 22.
Right.
I mean, obviously we know what happened in September 22. So it's always good to know that things are happening in the background and people will like usually fixate on the media, doom and gloom and whatever else.
Yep.
There's not been too much reported about that now, but to know something like that's always good is what I always find. So
I completely agree. You wouldn't know that there was some good sentiment by reading the newspapers or watching the television news. It's not sensational. What is sensational is when rates start going up and up and up. That gets reported on. It's front page news, and we all know about that. It's very less well reported when rates start to tick down a little bit, and that's a shame because the media plays a really big part in the mood of the country, the sentiment of the country. And if you keep reading that rates are going up or that there's not much cause to be optimistic, you might decide I'm just not going to move house this year, or I'm not going to buy my first house this year. You and I are at the coalface of it, and we know it's more than that. It goes deeper than that. It's to do with your personal set of circumstances. I'm sure you get asked a lot, is now a good time to buy? You get asked that all the time, and the answer is it depends on your personal circumstances. It's never, if it works for you now, if you can afford it, if it's within your budget, if there's some wiggle room, if there are some rate increases, then it works for you, then absolutely it's a good time to buy. But yeah, it would be helpful last week, this is the second week in May, there were 3 big high street lenders who suddenly out of the blue reduced their rates. I only know about that because I'm a mortgage broker. You wouldn't have read anywhere about that in the press anywhere, which is a shame. So we could probably do with that being a little bit more obvious in the press, but a bit more publicised. I think that would be a bit more useful. But don't hold your breath.
So coming back to you then, when is it in your mind a good time for someone to actually speak to you?
Yeah, look, I think it's a really good question, and every broker is different. From my perspective, it's never too soon. It's never too soon to pick up the phone or ping us an email or arrange an appointment to have that conversation, to open that conversation, because it may be, and is quite often a case, that you might not necessarily be mortgage ready right now. You might think you are, you might just want to talk to me about the market, you might just want to explore what your options are. There are times where it's too late. So for example, if you've put an offer in on a property and then you start ringing me, a mortgage broker, I will move heaven and earth to get the decision in principle for you in the speed that you need it, but that's a little bit too late. So I would always say, pick up the phone, we can always start that conversation. We don't have to continue it. We can come back to it in a month, 2 months, 3 months, whatever it is. But if you're thinking about either buying a house or buying a property or moving at some point in the not too distant future, just start the conversation, and then we see where we are.
And touch on as well remortgages as well.
Yep.
I've come across this quite a bit where people aren't always sure when they can start the conversation in terms of remortgaging. When is that?
So it changes from lender to lender. You will, in vast majority of cases, get some form of communication from your lender advising you that your mortgage is due to expire, and it's usually, for most lenders, it's about 6 months out. So they will tend to send you a letter or an email a month or two before that 6 month period. So if your mortgage is due to expire in 6 months, you have the option to roll on with your existing lender. So you can just remortgage. It's called a product transfer with your existing lender. But we would always recommend speaking to a broker, somebody like us who is a whole of market broker, and go out to the whole of the market and see whether your existing lender is still competitive. Because they might have been 2 years ago or 3 years ago or 5 years ago. A lot changes in that period of time. There is, it's just like if your electricity supply contract is coming to an end, or your car insurance. Everybody goes back out to the market to make sure they're getting the best possible deal. There's no difference, and in fact, I would argue even more so with your mortgage, because it's a lot bigger. So you've got to make sure that you are leaving no stone unturned, and that's the role of the broker essentially. Okay.
And I was going to say something. With people now, so we're 2024 currently, people who are buying in 2020, 2021 would have maybe 2019, 5 years, five-year fixed rate.
Coming to the end of their
2020, 2021. I'm thinking more 2021 having 3 years and potentially coming towards the end of it. And I know that there's a lot of people that would be worried.
Correct.
Because they're on such a low interest rate and it's going to go up. Is there any advice? Well, not advice. I technically can't do it. But is there anything that you've seen in terms of tricks that people can do to help protect themselves or keep their monthly payments roughly the same as what they're currently paying now?
We call them tools, not tricks. But there are tools that we can use. There are things that there are certain levers that we can pull in order to try and soften that blow. So you're absolutely right. Somebody who's taken out a 5-year fixed rate mortgage and they're on 1.5%, 2%. I mean, it's very typical. That's a very typical kind of rate that was available back then. The jump is significant now because it's going to start with a 4, possibly even a 5. And for a lot of people, if the mortgage is sizable, they've got hundreds of thousands of pounds in their mortgage, that's going to impact them on a monthly basis by hundreds of pounds. And for a lot of people, that's unaffordable. So there are things that we can do. First of all, definitely go back out to the whole of the market. In that circumstance, do not just roll on with your existing lender. Find a good broker, a whole of market broker, and go out to the whole of, make them go out to the whole of the market, instruct them to go and find the best possible deal for you. There's also your mortgage term. So you might take out a mortgage over 25, 30, 35 years, whatever it might be. Your mortgage term determines the value of your monthly repayments. If you stretch that mortgage term, your monthly repayments get reduced. But obviously, because you're taking the mortgage out for longer, you'll be paying more interest back over that period of time. But for a lot of people, there was no choice but to do that. They've had to swallow that extended mortgage term. For maybe like a 2-year fix, something like that, 3-year fix, just for a relatively short term. And then again, when they come to remortgage, if rates are better and their affordability is there, they can bring that mortgage term back down again. But it's just a short-term fix in order to enable the people to stay in their homes and to try and reduce those monthly repayments for them. Okay, that's good to know. Like I said, I don't think it'll be everybody, but it'll be a lot of people who really stretch themselves over that period of time. What are common mistakes that you see people making? I'd probably say aiming at first-time buyers. I think there's people a lot more seasoned after that. But what are common mistakes you see people? I think credit is a big one. You know, people often underestimate the impact of missing a mobile phone payment from a year ago, or whatever it might be, or moving house and not telling the utility company, and then having a default or whatever. Again, credit is absolutely key. Lenders pay a lot of attention to it. So we always ask people for their credit reports. So we'll send them a link, get them to download their credit reports. And often they're very surprised at what they didn't know in their own credit reports. And these are critical documents that we should all be very much, so every month be all over them. Absolutely right. So getting your credit in order is a really big one. So understanding the impact of it, the impact of adverse credit as well. Again, we deal with a lot of specialist lenders who can assist people who've got adverse credit. So there is almost always a lender out there for every circumstance. But that's one of the big ones. Deposits are a big thing as well, and not knowing where they can get deposits from. So a lot of lenders these days are very happy taking what's called a gifted deposit. So it might be mom or dad or brother or sister, or even family friends. Some lenders are even allowing people that are non-family members to gift deposits in order to help boost your affordability, essentially, and get those people onto the ladder. I think the final thing I'd probably say, Levi, is looking at shared ownership. For first-time buyers in particular, look at shared ownership properties. A lot of people look at the value of the property and think, well, I'm never going to get there. But you can buy a share of a property and still be a homeowner without having to buy the entirety of that property. And then you can, over a number of years, buy chunks of that property until you get to the point where you own. Exactly. So there's a dozen other things that I could, but those are sort of two or three of the sort of the key things that first-time buyers in particular should be thinking about. Okay. And is there anything that I've not asked you that I should have asked you? I think credit is the really big one, and I think the question that you asked me about when to speak to us is probably the thing that trips most people up. So just to recap on that point, it's really never too early. As soon as we're on board, you're onboarded as a client, you're a client for life then. Now, whether or not we transact and do business within the next month it's often not the case. It's just starting that journey,
Yeah.
and we go on that journey with you, and we support our clients right from the very first phone call all the way through it, and we help with the solicitors, we help with surveyors, we help with whatever the insurance side of things as well. That's a really important point, and that will probably be the sort of the big key point that most people probably underestimate, particularly first-time buyers when they're coming into it, is talking about insurance. The sort of the posh word for it is protection, but it's your life insurance, your critical illness insurance, and your income protection. When you're buying a property, particularly if you're a first-time buyer, it's a massive undertaking and a huge asset and a huge liability. You want to make sure that if something happens to you, or if you're buying with a partner, your partner, that you're fully insured, and that mortgage will get cancelled immediately in the event that something happens to you. Okay. So that's the biggest thing that people underestimate. So you can't buy a car without it being insured. There's a number that your mobile phone's probably insured, your cat's probably insured. It's amazing how many people don't think that insuring their home or that the life and the critical illness around their home is an essential thing to do, and it really is. So again, we help them through all that process, and it's often a lot less expensive than people think it's going to be, and it gives them that total peace of mind when they bought their property.
Everything's fine. Okay. And how do people get hold of you? How do people find you?
So either find me on LinkedIn, or our office is in Tadcaster, so they can always come and see us. Face-to-face meetings, we love them. They're quite rare because we've got clients all over the country, but certainly they can come and see us. Or every client of mine has my personal mobile phone, and obviously my email address as well, which I can give out. It's entirely up to you. Yeah. So my mobile number is 07766 654 308. And my email address is james.homer, which is Homer, at Forest Hall, Hall, fs.co.uk.
Nice. Okay, that's good to know. Okay. And then LinkedIn is just James Homer.
Yeah, LinkedIn you'll find, just search James Homer, or Forest Hall Financial Solutions, and you'll find us on there.
Perfect. Well, thank you for sitting down with me.
Oh, absolute pleasure.
And thank you all for listening. And of course, if you've got any interest in purchasing, if you need any help with it, want any advice, remortgaging, then please do get in touch with James. And in the meantime, please do like, follow, share, subscribe, review, the usual stuff I always say at the end of the podcast, just to help us push this far and wide, and look forward to seeing you guys in the next episode.